Hey, it's Leanne from Pursuit of Profit. As promised, I'm going to be diving into a little 3-part series on the different financial sides of your business life. What I found over the last 16 years as I've worked with all different sized businesses and all different business owners from different experience levels when it comes to money and even business background is there is a lot of confusion between the difference of your cash flow strategy, your tax strategy, and then when you want to look in that rearview mirror and take a look at your financials when they're already behind you. Those 3 things are really hard to get your mind around, and they're really hard to know where to put your focus, especially when you're around me and I'm trying to get you to focus on being profitable. So what we're going to do is we're going to dissect each piece so you understand it clearly, and then as you have that clarity, like I see my clients that I'm face-to-face with, as they have that clarity, they begin to understand, oh, I know where to invest my time and my money and my effort, and I need to never confuse those 3 things again. So here we are. First we're going to do is we're going to dive into tax strategy. And I know that seems like an unusual place to start, but I'm going to hit that one first because it's something everybody is always thinking about. Tax strategy is this idea when you own a business about what you end up owing. Sometimes what you end up owing is on the payroll level, where you tend to owe money because you have employees and maybe you've impounded their tax and you have to send it in, or you have L&I tax, or maybe you're the kind of business that's in retail or service and you have to collect sales tax. So tax strategy itself is about what you owe to the government as a privilege of doing business in whichever state you live in. On the other side of tax strategy is this idea that you want to stick it to the man where the IRS is concerned. One thing I know for sure is that you cannot spend your way out of a tax bill. What I don't think most people understand when it comes to their taxes is that you run your business life 364 days a year, and it's only on one day a year that you are actually going to file a tax return, and on that one day a year, all of 3 of these things, tax strategy, the cash flow strategy, the profit strategy, and the accounting strategy all come together into one place when you file your taxes. But that's only one day a year. 364 days a year, you're making decisions as a business owner with a business checkbook that actually impacts your bottom line and impacts what you're going to owe on taxes. So I want to make you really clear about something. You cannot spend your way out of a tax bill. It doesn't work. Because if you think about it, if you're in a 30% tax bracket or a 28% tax bracket, whichever, and you spend $100 because you think something is a write-off, like maybe you're buying something that you maybe don't need for your business, but you're looking for tax deductions, if you spend $100, you're actually only saving $28 in tax. It would have been a lot better to save the $73 than it is to go ahead and spend that. So one of the things that you've got to shift if you want to get to the place where you want to be really profitable is to acknowledge that there's a difference in your business between actual profitable spending, and profitable spending makes you multiple dollars back for every dollar that you spend, including taxes. So profitable spending allows you to be a profitable business owner, and BS spending is buying stuff like trying to buy tax deductions that do not benefit your business or grow your business. So just know that when you're spending money on your business, it really is only saving you 30 cents on the dollar. And the shift I want to have you come through is the recognition that it's better to keep the money you're making. It's better to keep 70 cents for every dollar in your pocket than it is to try to spend $1 to save 30 cents. You're smart, you're savvy, you know better than that, and we just got to get you to the place where you recognize that tax strategy is one piece of the puzzle, but when you actually use it properly and you put it in its proper context, then you'll understand that having a tax bill at the end of the year is not something you need to be afraid of. It's something you have to plan for. It's an expense of doing business, but it's not something that you can beat, and it's not something you can slide your way out of, and there's no real trick to out MacGyvering, so to speak, the IRS. You have to have a plan for tax savings. I'll help you figure that piece out. But on the other end of that, recognize beyond just the taxes and the IRS and the Department of Revenue, wherever you live, remember, it's way more important to keep the money you're making than it is to spend $1 to save 30 cents, or to spend $100 to save 30, or to spend $10,000 to save $3,000. Keep that money in your pocket, keep it in your profit account, and you will begin, like so many other people, to recognize that the power is in your hands and you can run a profitable business now. Tomorrow, I'm going to be covering cash flow strategy and this distinction between cash flow and accounting and what that all means for your business. See you then.